Hello everyone, and welcome to Think Wealth TV. In this community, we're all about getting wealthy, and we're happy to have you here to get wealthy together. If you notice, this thumbnail is green and the left side of it. That's not by chance. That's actually because it's portfolio related content like we're going to be talking about today. We also have educational videos that are blue, and we also have opinion related content that's orange. Now when it comes to my portfolio, I'm fully transparent for you guys, so you guys can see exactly what I'm invested in. I'm not a guy who makes videos or makes articles about what stocks to buy, talks about what he likes, what he doesn't like, and doesn't actually own any stocks or owns very little. So that's something of value I think you guys could take from this. And then also too, guys, the biggest thing you can do to help this channel out is subscribe. That's huge for us. Hit the like button, notification, and share this video with whoever you know. That helps us out greatly. Now, when it comes to today, we're going to be talking about one, my Fidelity accounts, and then two, we got our Robinhood account. We do quite a bit of things in that one, and then we also have a 457k we'll talk about, and at the end of the video, we bring everything together in an Excel sheet. So that way, it's just kind of nice and organized, so you guys can see everything on one screen. That's what I use to track everything as a whole. And then we're also going to be going into something as an update. I don't know if you guys watched the last couple of videos I made. I talked about M1 Finance. M1 Finance, I did a video on it a little bit ago. And I named some positive things, but there was some negative things about the brokerage I felt that I listed in there too. But just as a quick update for you guys, I started a transfer. And this wasn't in the video. I might make an update. But I started a transfer on Friday, on the 28th of last month. It says 8/28, and it actually went through pretty quick because it started after the trading day was closed, and it processed on Thursday, September 3rd. So it was a pretty quick transfer, but I asked them ahead of time. I had a Roth there, and I mentioned I had a Roth, and I mentioned how much it would cost to transfer over my whole account via ACATS, and they said $100. They charged me $200. I emailed them. I showed them the email that they sent me saying it was $100. They said, well, you should have read the disclosures. So that kind of sucked. I was a little upset about that. But again, I said it happened on 9/3. The assets transferred over. On 9/9, I was checking, and I noticed that I was missing 19 shares of Tanger. So more than likely, they were going to keep those shares. I emailed them and said, hey, I'm missing these shares. Is something going on? Never responded back, but the next day they showed up in my Fidelity account. So that was a little bit ironic that they double charged me on the fees, and then they also were going to keep possibly my Tanger shares. Maybe that's speculation, I don't know. But I also have dividends coming. Now typically when you do an ACATS transfer, dividends get transferred from that brokerage to the new brokerage where the ACATS went. So they would go to M1 first and right away be transferred to Fidelity. I have a feeling they're not going to be. Check out our next video coming up next week. We'll see if that happens. I did receive a Walgreens dividend today, but not from M1, just from my Fidelity. So we're going to see if we actually get that dividend. If not, I'm going to email them on Wednesday. So we're going to see what happens with that. I have a feeling, though, that I'm not going to be getting them, so I'll keep you guys posted on that. Now let's jump into Fidelity accounts. All right, guys, we're sitting inside our grand retirement account with Fidelity, and we're at $27,476 and 4 pennies. If we go over to activities, the week started on 9/8 on Tuesday due to Monday 9/7 being Labor Day. As you can see, we talked about earlier, the M1 Finance transfer of assets happened on 9/3. On 9/8, we got $15.15 from Johnson & Johnson, $4.69 from Unilever. That is a European stock. Since it is an international stock, they did charge a 5-cent fee. And then those are those shares we talked about from Tanger. I messaged them again on 9/9, the next day they got there. We also got $6.45 dividend from Chevron on 9/10. On 9/10, we also got an $8.70 dividend from ExxonMobil. And then on 9/11, we got $4.68 from Walgreens. That's for the 10 shares I have in Fidelity. That doesn't include the 5 shares that was in M1 Finance. I'm sure that dividend went to M1 Finance because it did not show up in my Fidelity account. don't think I'll get that dividend unless I message M1 Finance. So that's another thing that kind of sucks. I'm so happy I left that company. And our balances right now we're sitting at 335.11 for cash. Thinking about possibly picking up a MLP, putting it into this account. Not 100% sure. That's something I'm kind of thinking about and leaning towards right now. We're inside our HSA account now. The balance is $10,882.33. I forgot to mention, in our grand retirement, in total we made in dividends so far $39.62 for the week. So that seems pretty good to me. Looking at the activities inside the HSA account, as you can see, we did not get any dividends for the week. So that leaves our dividend total for the week still at $39.62. Go to balances, we're still sitting at $13.15. Just holding on to that money right now. We have a CD renewing in October. When that CD renews, we'll have an extra $2,000. We'll probably buy some VXUS, maybe some bonds. We might do both of those. We're inside our very small cash back account. This is all money I got back from my credit card. None of this money I put in my account, just rewards basically. So we're sitting at $136.29. Inside activities, it's the same as my HSA. There was no activity for the week. So we're still sitting at, for all the Fidelity accounts, at $39.62. Balances, we're still sitting at those 27 cents. So nothing changed there either. Now let's jump into Robinhood. We got quite a bit more activity in that account. Alright guys, we're inside a Robinhood portfolio. It's in at $26,668.02. We are down for the week. The market as a whole has been down. For the week, we're down to $356.48. That's not too bad. It could definitely be worse, but it'd be nice to be positive. Look at options. If you guys aren't familiar with options, the first one, T, that's for AT&T, it says 0.08 cents. That's times 100, so that's worth $8 that contract right now. I sold it for about $50. So I have a couple contracts expiring. We have AT&T at 9/18, that's next Friday. We have PBCT at 9/18, and we have Maine at 9/18. So all of those are going to be expiring, hopefully worthless. I don't think AT&T will fill at $28, but PBCT could possibly go down to $10. If it does go down, I'll probably do the wheel strategy. Not 100% sure. I do like that company a lot. Main Street Capital, I will do the wheel strategy. They do pay dividends monthly, so we'll see what happens. But if I click on Main, originally they paid me $100 for the contract. If you see down, there says average credit $1. That's times 100. So they paid me $100. It's been kind of bouncing around between, I don't know, $29.80 maybe, and $30 and 50 cents. So if it is under $30, it'll get filled, and I'll just do the wheel strategy. If it doesn't get filled, what I'll do is I'll probably do another put, because they pay really well. And we go to view all options. If we go out a month to sell a put at $30 next month, $128. Now, if the share price stays exactly the same at $30.31, and it's been a week now, it'll probably be like maybe $108, maybe $118, something like that. It probably won't be the $128, but if it goes down to $30.05, who knows, it might be sitting at $130, $140. So to me, that's really good money to do a put for 1 month. Scrolling down, Exxon, BP, those are looking like it's probably going to get filled. I don't know if Haynes will get filled. If it does, I will not mind. BP and Exxon, I'm not sure what I'm going to do, if I'm going to do the wheel strategy or if I'm just going to wait for the prices to go up quite a bit. Nothing drastic, and just sell some shares, and then as they go up more, maybe I'm up 50%, I'll sell like half the shares. I'm not 100% sure which one I'm going to go with those two. And then we have another contract for PBCT on 10/16. So if the one on 9/18 expires worthless, we're sitting great. We don't have the shares, and we already have another contract out for next month. We won't buy another contract at PBCT until we're in October. Then we'll do one for November, unless the price goes way up and the contract's not worth much. Alright guys, let's go into activity for the week. The week started on the 8th. We tried to buy back the AT&T put, didn't go through. Tried to do a GE, sell a put for GE for 30, that didn't go through. GE is one I'm looking at right now. I do think that GE
will go up to at least $12 a share, and then I'll probably sell 25 to 50 shares. So I'm thinking about buying the shares, trying to get them for $6 a share and collecting $30 of premium. But on 9/9 we got $9.60 from Southern. We tried to buy our put back on 9/9 for PBCT for $5, didn't go through. We tried AT&T again, $5, didn't go through. On Monday, if I can buy them back for $5, I probably will. If I cannot, I might just hold on until Friday then, because what's the point of paying $5 to get them back when it's going to expire in a couple days anyways. We tried another GE put for $30 on the 10th, didn't go through. But what did go through is all those dividends on the 10th. We got IBM $24.45. We got Exxon paid $34.80, and CVX paid $25.80. That's some really good dividends in one day. So the total for Robinhood for dividends was $94.65. And if you remember Fidelity, we had $39.62. That's quite a bit more we made in Robinhood, which is just fantastic. But the grand total for both Fidelity and Robinhood, we're sitting at $134.27 for 1 week of dividends.
Alright guys, we're inside my portfolio tracker through Google Sheets. But before we go into detail about this, there's something big I gotta let you guys know about. If you guys have not signed up for Robinhood, right now you guys can get a free stock. There's a link in the description below. Make sure you guys use it. There's nothing better than free, for the most part. Now, if you look at my Google spreadsheet, I try to have it color-coded and I try to make it really nice for you guys so everything looks good. Hopefully you can see everything clearly, because that was my goal. But up here you got ticker, company logo, company name, you got share price, number of shares, dividend yield, annual dividend, market value, annual income, port allocation, that's how much my portfolio is allocated, what sector they're in. Sorry to go over it quick. If you guys seen any of my other videos, I don't want to be redundant, but I do organize them by sectors. That's how I normally have it organized. We normally have it done by sections. You guys can see the shares. We'll kind of scroll down. I tried to make this really nice so you guys can kind of see quickly instead of trying to read all these different company names. Sometimes they kind of blend together. A picture a lot of times looks a little clearer. So let's keep scrolling down. Some key numbers I wanted to talk to you guys about is one, I don't know if I mentioned in my other videos, but this is a great number. This is how much I'm expected to get in dividends per year. And I did go through each one, made sure everything looked accurate for this video. So it's estimated I'm going to get $3,045.55 for the year. That's pretty nice. Free money. That money will be reinvested. So I will be buying more dividend stocks. So if you think about it, next year we'll have $3,045 worth of new stocks paying dividends. So we'll get more when it comes to that. And then we'll also get the raises. So it looks great. Margin, I'm using $1,864.36. That is slowly going down. I do have cash outside of the brokerage accounts to pay this margin. It's very important. Just want to mention that. I don't recommend people using margin, but I have the money to pay off the margin. I have a lot of puts that are out, and as of right now, if they all get filled, looking like the oil ones will, the margin will go up. But again, I have cash to pay off all the margin right now if I want to. If the stocks do get filled, BP pays a little over 5% at the $22 share price, and Exxon pays over 8% at the $40 share price. AT&T pays over 7% at the $28 share price. So if you think about it, the margin, they're charging me 5%. If I get all those stocks, I will be making more in dividends than I'm paying in interest. Plus, I also have the $3,045 paying me. Plus any money I make from options. If you guys haven't seen my last video, I go over how much I made for the month of August. I did really well when it came to option premiums. A couple other things worth mentioning. Right over here is my 457K. There's $32,728.06. That money can be withdrawn at any time. Starting next year, the plan is to take out between $9,000 and $10,000. If you watch how much I made in August, technically this one's just reinvesting the dividends, and it doesn't really show me. So I don't know how much it's really making in dividends. I'm estimating about 2%. So if you think about that, I really have about $70,000 of working capital, I'll call it. That's what's making me this $3,000. $70,000 is making me $3,000. Once I pull out the $9,000 to $10,000, right there is going to give me more cash. Let's say we had $10,000 into my Robinhood from that 457K. Plus, I'm going to have $3,000 in dividends. That's $13,000 worth of stocks. Plus, I'm going to add $6,000 to the Roth Ira. That's the grand retirement you see in Fidelity. Some of you guys might not know, you can touch your money inside your Roth IRA, whatever you put in there. So if you're a dividend investor, you do it for 10 years, you have $60,000 in there, you can start withdrawing dividends after 10 years if you wanted. Let's say 10 years you wanted to retire. You can start withdrawing dividends up to $60,000. So if you have $60,000, and mind you, off of $70,000, I'm only making $3,000, you'll probably bring in, let's say, $2,500 a year in dividends. You know how many years it's going to take to spend those dividends to get up to that $60,000? So I'm not saying to do this with a Roth, but it's just some food for thought. Some people prefer not to invest in Roth for that one specific reason. Overall, Roth's fantastic, and you can still withdraw your money. Cash inside of brokerages, worth mentioning, is $1,648.53. I have in CDs, that's inside my Fidelity HSA $2,000. When that renews in October, we'll probably buy some shares, like I mentioned earlier. This $98,259, that's my total withdrawable money. So if I withdraw everything out of my accounts, that's what I would get after the margin and everything else. With that being said, with my thumbnails, I'm tracking how much I have in actual stocks. This $100,000, $123, that's how much I have in equities, cash, CDs, everything inside the brokerage. Right now, that's what I put for the thumbnails. I might, guys, change it and start using this number. So if you're watching, you see the portfolio loses a couple thousand, I might start actually using the withdrawable amount for you guys. If we look at portfolio allocation, this is really nice. It shows you how you're weighed. AT&T, I have a lot in AT&T. I might even buy more AT&T. I really like AT&T. I really like Disney. There's a lot of good companies. I like Johnson & Johnson a lot. All these companies I like a lot. But if you look at my 457K over here, 32.7% of my portfolio is in there. So getting that money out will make that slice of the pie smaller, and I'll be able to allocate more money in these other companies, or possibly even a new company. This is a section that I like a lot. This is my annual income. It shows where I'm getting passive income from. My cash equivalents, those are actually outside of my brokerage. I get about a little over $100 a month. I put down $100 a month because I like to estimate a little bit lower, especially with how low interest rates are. I'm starting to earn a little bit less on my actual cash, so I try to underestimate it. That way I'm not overestimating it, so it's a little bit more accurate. But as you can see, I have 28.3% in there. That's quite a bit of money. But it shows you what else we're making. And another note on that cash equivalents, me and my wife, we do real estate, or that's what we do to get by. That's how we make a living. So we need some cash on hand for the real estate. So I do have too much cash, in my opinion, when it comes to cash to stock allocation. I'd like to have more money in stocks, but I got to keep some cash. So ideally, I'd like to increase my allocation towards stocks, meaning hopefully we'll sell this property next year. If that happens, I'll be able to put some cash into my stock portfolio. But at the beginning of the year, I'm still going to put $6,000 in the Roth, and I'll still probably put some other money in. I'm thinking about putting another $1,000 in just my Robinhood soon. Not 100% sure. That's something I'm thinking about. But something I focus on more, how I'm allocated sector-wise. And as you look at this pie, at least in my opinion, it doesn't look that bad at all. I like how it's allocated. I don't want everything perfectly equal. For example, I like having a lot of allocation in consumer staples. Only downside about consumer staples for me is I'm really heavy in tobacco stocks, but I do like having this much allocation in consumer staples. Maybe I'll pick up a good position in Pepsi. Not sure yet. I do really like Pepsi. I just don't like the price it's at right now. I wish it would come down some. The P is a little bit high for me. And I don't see massive growth with Pepsi. I do see growth, but it just doesn't justify the PE for me personally. It's a great company. I was hoping it'll come down some, and I'd like to add a large position to that. Energy I'd like to make smaller. Those puts get filled, it's probably going to get bigger. but I'll just wait. Short to medium term, they're going to go up quite a bit. I should be able to make some decent money off those energy. So I shouldn't end up being a long-term loss. It should be some profits, but not long-term profits, more short to medium-term profits. Financials, 5.5%. I'd love to grow that. A stock I'm watching right now that I'm thinking about buying is MTB. That'll add to my financial position. Healthcare, I like that. I mean, I wouldn't mind healthcare being at 10%, but 11.8 looks good. Industrials, I'd like to get up to about 5. Materials, I'd like to get up to about 5. REITs, I'd like to get up to 10%. Technology, be nice to get up to about 5%. Telecom's pretty big. It should probably be at 10%. That's more of a long-term goal because if I buy more AT&T, it's going to go up some more. Utilities, I want about 5%. It's at 4.9. So utilities looks good. ETFs, I'm trying to get a little bit more into ETFs. You can't always beat the market. Sometimes you underperform it. Sometimes it's better just to buy ETFs. So I'm considering maybe getting up to 20% ETFs. I'm not sure. Somewhere between probably 10 and 20%. But my sector allocation, if you guys stuck through that long spiel, for what I want, it looks pretty good. All right, guys, thanks for sticking through. I know there's a lot of detail here. I hope you guys like the Excel sheet. That's what I use to track. And the nice thing about it is you guys can see what I'm seeing and everything in one place. If you guys did like the video, make sure you guys click that like button. It helps out tremendously. And make sure you guys subscribe, hit the notification bell, and share this video with whoever you can. And remember, guys, as always, think wealth.